Hello everyone, the 9th video in this series is about insurance. Health insurance. Health insurance is a type of coverage that pays for medical and surgical expenses for the payee in exchange for a premium. Employers may provide health insurance as part of a benefits package, and individuals may want to supplement it with personal insurance on their own. Health insurance plans. Typically, managed care insurance plans require their members to receive care only from their network of providers to maximize coverage. If an individual goes outside the network, the charges are higher. Managed care plans consist of health management organizations and point-of-service, preferred provider organizations, and the high-deductible health plan. Health management organizations and point-of-service require referral from a primary physician for specialist visits. Preferred provider organizations don't require referrals, but the in-network costs are lower. The high-deductible health plan is a new plan with low premiums and high deductibles. It is becoming increasingly popular. In this, contributing pre-tax income to a health savings account can be used to pay for qualified medical expenses. Home insurance. Home insurance covers losses and damages to an individual's houses and assets in that home. It also has a liability coverage against any injury that happens on the property. Home insurance. Typically, items that are covered under home insurance are interior damage, exterior damage, loss or damage of personal assets, and injuries on the property. There is a deductible that needs to be paid, and the remainder would be paid by the insurer. Typically, acts of war or acts of God, such as earthquakes and floods, are not covered unless special coverage is taken for them. However, hurricanes and tornadoes are typically covered. The premium paid for homeowners insurance is typically included in the mortgage payments through an account that is created and funded by the payments made by the individual. Home warranty is different from insurance. Home warranty is used to pay for repairs and replacements of home systems and appliances. This is optional and may be good to get if there are expensive appliances, as home insurance does not cover the damage. Take an annual video update of everything in the house to show what was in the house if a loss claim is made. Automobile insurance. Automobile insurance covers damage to vehicles and protects someone financially if someone else is injured. Automobile insurance. It has 3 components. Number 1, protects you, passengers, and your vehicle through medical payments, collision, and comprehensive coverage. Number 2, provides coverage for third parties due to an at-fault accident on the payee's part. The insurance covers the liability of others. This is called third-party coverage and covers both bodily injuries and property damage. Number 3, protects you from injury or damage done by someone who has the ability to pay for the damage. Number 1, car lenders typically want comprehensive and collision coverage. The minimum varies, but the common split is 25-50-25, which means $25,000 coverage for individual injuries, $50,000 for passengers, and the property damage liability minimum is $25,000 per incident. Number 2, most states mandate to get third-party coverage. Some states also mandate uninsured motorist coverage, protecting you if you are hit by a motorist who is uninsured. Even if your state does not mandate it, it is a good idea to purchase it. Number 3, don't fall prey to buying gap insurance to cover for the gap between what is covered and what is not. Number 4, save your maintenance receipts to dispute the payment paid by the insurance. And number 5, take advantage of discounts such as safe driving, bundled home or life insurance, and multi-vehicle insurance. Life insurance. Life insurance pays out a sum of money either on the death of the insured person or after a set period. If you want to provide security for your loved ones after your death, this is a good insurance to have. There are 2 types, term life insurance and permanent life insurance. In term life insurance, there is no cash value or investment component. This is a lower premium than permanent life and pays out only if there is a death and covers for a set period of time. In permanent life insurance, the investment portion grows tax-free, and you can borrow against it to buy a house or fund children's education tax-free. Tax-deferred growth can be advantageous if you are maxing out on contribution for your retirement funds. Additionally, as long as the premium is paid, the payee has a lifetime coverage. A downside for the permanent life insurance plan is that it includes higher premiums. United Link Insurance Plan is a combination of insurance and investment in equities. Number 1. When you invest in Ulips, the insurance company invests a part of the premium in equities or bonds, and the rest in insurance cover. Number 2. There is a lock-in for 5 years, but the benefits don't show up till the term is over, which is 10 to 15 years. Number 3. Ulips allows switching between portfolios of equity and debt based on risk profile and market awareness. Number 4. Pick Ulips that match the investment profile with your risk profile. A thorough investigation of available products compared to your profile will help evaluate the need and the amount of purchase. The disadvantage with Ulips is that the lack of transparency in how the capital was used for commissions and expenses. Risks of being uninsured. There are many risks of being uninsured. Number 1. High healthcare costs may cause you to not be able to pay for the medical bills. It can also cause hesitation to seek necessary health care or necessary medication due to the cost. Comparatively, charges for healthcare bills are significantly higher for uninsured compared to the insured. In case of untimely death, family members may not be provided for. Number 2. Families may inherit the debt payments as death does not write off debt. Number 3. Automobile repairs can be pretty expensive, especially for some cars. Number 4. Natural disasters such as hurricanes can cause huge repair bills for the house if not insured. And number 5. House maintenance is expensive. Thank you for watching, and I hope this has been an informative video. In the description box below there is a link for a Quizlet which will help test you on insurance. Comment down below if you have any suggestions or questions, and click the like and subscribe button. See you next time.